Good morning, ladies and gentlemen, and welcome to the Backpacktrader training room. Crude oil inventory report for Wednesday, May the 3rd, 2023. I'll remind everybody this room is for educational and information purposes only. It is not to be considered individual financial advice. Trading of this type carries substantial risks and should only be attempted with funds that you can afford to do without. Doing the risk statement without benefit of the slide this morning because we had a power out about an hour and a half power outage last night, just as my wife and I were going to bed. So I haven't got everything fully up and running yet again this morning. Good morning, Jeff. All right, less than a minute to the report. We have spotlight, crude chart, and hey, there's the report coming out. But not really much of a reaction, just several quick bars. That's all of the reaction that we got. About that. There we go, starting to get some movement. Still very tight, less than just 19-cent range since the report. And I'll look for a new trade. I'm not going to try to get in sync with this trade before the report. I mentioned during the regular session this could be kind of a sideways session. And here's a move. I'll get this reaction range. We're just almost 2 minutes in. Still less than 30-cent range, so not much there. That's gone by its money management, so no trade. That was we'll look for a new trade. Okay, there is a short trade set up. Yeah, that's still, that's after our start time, so that one's valid. On 377 tick. Small trade. Oh, now it's a really small trade. Target 4. And there's a short trade on unleaded, just triggered in. And we avoided the stop and reverse long. That has canceled on the 377. Still short. Unleaded short, getting close to 478 for money management. We're outside of the initial, wow, crude pushing down hard. Target 2 on the nose for the 377 tick. Stop at 71. We got targets 1 and 2 on unleaded. Not big targets, 24 and 39. And currently trailing at 486. No trade yet on Spotlight. All right, Spotlight is flat now. We did stop out of the unleaded short, so that trade is done. And we stopped out of the 377 tick crude short on counterpunch, so that is done. POQ, both of those one and done. Long trade setup on Spotlight, but not triggered yet. All right, we did trigger long on Spotlight and taking heat. That's the only thing still going. There's a stop and reverse. Short now on crude. Crude down considerably from yesterday even. around 68.50 now. New session lows. 68.65, 64 for the entry. 68.93 for the stop. Target at 68.45. Good time for questions. Not much going on. $377 tick and the 8 tick range bar are definitely looking very different. The report plan for Spotlight is exactly the same as the mini session plan. Trading on the 8 tick range bar, are you're referring to counterpunch? And that same there, trading target 2 as a primary target, minimum 10 ticks for money management or target for that matter. And there's another stop and reverse, 72, actually 73. I'll go ahead and it won't let me do that. So I got to go ahead and close that out. So we'll put in the entry to go long there. And this would be trade number 3. Small stop and reverse loss on that one, so I will go for the third trade. Alright, trade plan for counterpunch on, are you looking at it's counterpunch, go ahead to 5 trades. Target 2 win or 2 money management. No, don't use the 2 losses there. It's just a standard additional session. I would suggest taking a good hard look at the 8 tick range bar on that. 377 tick has been doing interesting. It's gotten much more active of late, and therefore the trades have gotten smaller. So it's been interesting. And now we go back the other way, so I'll just put an exit right there. Actually, put it down at 59. Need to bring those back where they belong. Actually, those are going to push up one more, because that is only an 8-tick money management. So money management is going to go up to 83 because of the stop and reverse adjustment. Okay, the stop and reverse is off. I'm still going to keep it as an exit point. Cut the risk slightly. Basically, it's you accept any number of losses up to your 5-trade max, or whatever circuit breaker you use. But there again, test how you want to run it, Jeff. I would take a look at the 8 range like we use on Spotlight. We had actually kind of switched to that a lot with the regular 3.7 or the regular counterpunch session. Troy never switched off the 377 for the crude inventory report until actually not too terribly long ago. When he switched from counterpunch to Spotlight on the inventory report. Oh, and there is another 64, so 62. Yeah, we'll come up for that one. Reduce our risk a little bit more. Yeah, you use the same, basically the same, not basically, you'd use the same trade plan you use for the regular session, because that's exactly what the inventory report session is it just an additional session. Our stop and reverse adjustment has kept us in the long. These last 2 shorts that have both triggered in unadjusted, but not after the stop and reverse adjustment in any key levels. And now we hit the entry on another long, so that I'm still going to keep the stop there because this is trade number 3. Spotlight, we're just using standard 3-trade mini session approach. recording your real what the trades that you actually take versus what you should take is actually a very good technique for doing some analysis of your trading in the UTA. Keep one for actual trades and one for what the system trades would have been. That'll tell you a little bit more about how you are trading and how well you're following your plan. Yeah, that's a good way to do it. Now do it in separate sheets. Don't do it in the same sheet. Or separate files, because that's a multi-sheet macro-driven application. All right, system is long, but it's actually in this trade. We're actually still back in this trade from 1041.43. No, money management was here at 81, but I pushed that up to 83 because of the stop and reverse adjustment to 73. And I pushed targets up to 2 and 3 rather than 1 and 2 because 1 was less than 10 ticks. Yeah. Now that's what the 25 in a row is for. Get you rooted in the trade plan, seeing what it does on a day-to-day basis, and since 25 trades in a row is probably going to be fairly close to a month. You get a chance to see a lot of what it's going to do, both good and bad. And so you get comfortable with it, and it's not such an emotional roller coaster when you really get to trading real money. Now, initially, your next 25 after the initial is going to be minimum trade size. So typically, that's going to be on the micro crude. $25 more mistake-free trades, and now you're 2 months in watching the plan work. And we did finally exit out on the last adjusted stop. So that ends the session. Any other questions, folks? Good morning, Mark. I didn't see you up there. I saw Pamela say goodbye. Busy with that, other things at the time. Hey, you're quite welcome, Aaron. Yeah, this last stop and reverse, and as I mentioned, one of these stop and reverses was a very small loss, so I went ahead and took that third trade. But I adjusted my stop up to the latest stop and reverse, so it was at 62, whereas my actual trade stop was at 49. So cut the risk by what, 13 ticks. Yeah, and that happened with this one over here. And when it does that, basically all you can do is mark it out of the existing position. You mark it out of the existing position and put a get in sync order in if it comes back. But on these two, we had we had one trade at 62, so that adjusted to 59, and one at 64, which adjusted down to 62. So that was where my stop was sitting, and that's where it stopped out, was at 62. Yeah, if it pushes through the entry too fast to trade, mark it out. Don't risk losing more by it just blowing on past your entry and never coming back. Go ahead and get out of the short position, or the original position, and put a get in sync order in to get back into the new trade, and hope it comes back and lets you in. But look at it the other way. If it doesn't come back and let you in, the fact that you marketed it out is going to limit your loss. Because if you didn't go ahead and mark it out, you just lose that much more up to the full stop of the original trade. Now, if it spikes through and comes back below or above the stop and reverse entry, put the stop and reverse in as you normally would. Don't mark it out if it does that. But if it pushes through and stays there long enough for you to have gotten an order in, go ahead and mark it out. Basically treat it, the only difference in a stop and reverse or just a regular trade setup is you're going to put your entry order in as a get in sync either way. The only difference being, if it pushes through and stays there long enough to put your get in sync order in, go ahead and close out of the original position. But basically, you're going to have to do that before you put your get in sync order in. So if it pushes through and then pulls back again, just do your stop and reverse as you normally would. Otherwise, mark it out, and if it goes through and stays, mark it out. Put in your get in sync order to get into the trade where you would have normally, and hope it comes back and lets you in. But don't chase it. All right, folks. That brings us to the end of the session. And we are almost at 11 o'clock. Yeah, if it jumps through and stays, mark it out of your original position, then place your get in sync order where you at the entry. Don't try to chase it. In fact, you saw me do just that when we had this one. I marketed it out, and actually it was coming back down as I did, so it actually was, and gave me about a 2-tick advantage, but then I went back with the entry order at 73. And that was the trade we stayed in for quite a while until we finally stopped out at the 62. But you saw me go up here and hit just close to close out the position, close out the original trade, and then I put in my order for the new to get in, and it ultimately came back up and put me in the trade. Tough session on Spotlight. Spotlight didn't fare well in that one. But one and done on unleaded and the 77 tick counterpunch. It looks like the 377 tick, the character has changed again, because I don't know if you did much testing with 377, Jeff, but just a couple of months ago, a month or two ago, the trades on the 377 tick were really big for the most part. And now the trades have gotten to where they're really small again. And it seems like there's just more activity in the 377 tick again. Obviously, so you're getting more ticks, which means you're getting smaller bars and therefore smaller trades. And there again, that's another reason I kind of like the range bars, is it's a little more consistent trade size wise, and it also is predicated specifically on price action and not numbers of trades. But if you notice a bunch of these, you know, this little yellow dot, that's your money management, and it's up above target 1, which means target 1, that's your 10 ticks. So a lot of these trades, target 1 is less than 10 ticks, and we just were not seeing that at all a month or so ago. And it was being big trades, you know, 20, 30, 40 ticks, 20 and 30 ticks to target 1. So it's completely different market complexion right now. All right. Yeah, it's just it's interesting. My speculation was that the 377 had gotten less active, fewer trades, and therefore bigger trades. Through trades going through, and therefore it was causing bigger trades on the 377 tick chart. And it had been basically since the micro crude contract had been introduced, and my speculation was that it was a lot of retail traders crossing over to the micro contract. And that may very well have been, and now it may be people are getting to a point where they're getting either account sizes or whatever, so that they're moving back to the full crude contract or any number of things. But it seems like it doesn't look like see, here's the. No, that's right. Here's the full crude contract, and I need to update this. So while I'm here, why don't I do that? do quite a bit of updating there. I have a template set up for this. And then I need to since we're already on the June contract, I'm looking at the there we are. Yeah, 275,000 to 86,000, so we're not there yet. And we're still a good 2 weeks away from where we'll be seeing a transition to July. All right. And then, and of course, after we quit, we get a nice two target successful trade. Yes, that's daily volume. And I'll check that in the mornings to see, where the volume is at that point on a particular day. Now, today, since the session opened yesterday evening, 277,000 contracts now on the June, and it's just a 2-panel chart is all it is, and it's the vol indicator in NinjaTrader. I'm sure TradeStation has something similar. And that's just a good way to put it on a chart. You can quickly look at, tell which contract you should be in. So I've got, and I just have to change one panel when we transition from, from June to July. Change the June to August, and then it's ready for the next month. I just hadn't changed the one on the that I have underlying this particular workspace. In a couple of months. Basically, since we transitioned May to June, I hadn't. Actually, no, it was still on April to May. So in April, I didn't change it to change the April contract to June, and then of course when we transitioned to June, I needed to change the May contract to July. All right, that's a wrap, folks. We will see everybody tomorrow morning at 9:30. Unless there are other questions. You're most welcome, Jeff. Have a good one.